Day Trading Support and Resistance Part 2. So today we're going to look at support resistance with regard to moving time frames around. Moving time frames, looking at different time intervals, if you want to call it that, and the impact that it has on support resistance levels. So, and it's huge, by the way. This might be a real eye-opener to some of you, might change your perspective on support resistance and why it is not quite as powerful as you might think it is. Even though everybody and his parakeet talks about it, which they should. I use support resistance levels, but as I emphasized in the last video, don't rely on them in isolation. They are not very reliable, and now I'm going to show it to you from a different angle. So, our last video, we showed you from this perspective. So we're going to keep the same everything. Okay, so market gapped up, went up here, we put it in a high, a swing high, came back down. So once it came down, that's why we put our support resistance level in there. Resistance in this case, came back up to it. Okay, we went through all that. Not going to repeat that, by the way. If you want to view part 1, I'll put a link in the description below for part 1. And you stay here and watch this one first, then go back to part 1. That's fine. Okay, the other thing for today, though, what we're going to talk about, as I said, are multiple time frames, or just different time frames. So this one's based on a 5-minute chart. Alrighty, so that's all fine and dandy. Now, what if we change the time interval? So first of all, let's just note that, that really did turn out to be a resistance level. Market came back up here. This is very clear, right? That's a clear swing high. Came down fairly significantly. Clear as day, no question, looking good. Now, let's go to another time frame. So that's 5-minute. Let's just kind of go up incrementally. And let's just double it to a 10-minute. All right. So now, this is the day. This was, by the way, April 15th, tax day. So I think really the IRS came in and kind of wanted to make people, I don't know, actually they'd want us to make money, I guess, because we got to pay taxes on the money we make, not on the money we lose. So anyway, whoever did this, it did not work out so good. So if you were looking at this and, oh my God, help you if you're a breakout trader. So you're looking at this, now you're looking at a 10-minute chart. And so you see, oh, right, there's our resistance level that's established. We came back up, came off of it, and now it looks like, again, if you look at it in real time, it looks like, oh, it's breaking higher, and it did. It broke higher, and it stayed above it for a little bit, and then it came right back down. Then you say, oh, wait, it's a failed breakout. So then you might trade the failed breakout to the downside. Well, that didn't work so good, and then it's like, oh, now I got a new breakout, and again, it's a higher high. Okay, finally, good. We've got all these, real bodies above it. High is higher. Nope, no so bueno. Goes below it. All right, so this picture looks different. Visibly, it looks different. Now, if we go to the 10-minute, or if we were on the 10-minute, let's go to the 15-minute, see what that looks like. Wow, not so good there either. So, very messy. Now if we go up to let's just go straight up to the 30-minute. That's the 30-minute. Now this just looks like a mess. Okay, so again, if you look at the 30-minute, now let's look at a couple of the differences we have from the 5-minute. So first of all, the line, and I have not changed this line. This here resistance level, this is constant. I have not changed this at all. But look how it looks on, first of all, it didn't match the high here, and the real body was all the way down here. So that almost looks like rejection of value pattern. Pinball, or not pinball, but pin bar. And then it comes up, and then it's just, now, it doesn't really get above and below in the sense that every one of these bars is touching the so-called resistance level. So it never totally breaks above. If you look at the highs and the lows, you could say it breaks it. But if you take the big picture and you look at the entire bar from high to low, you'll see that every single one of these bars is touching that level. That black line, that resistance level, which originally was resistance. And so now from this perspective, from this scale, 30-minute, it never gets a breakout in one way or the other. Never a convincing breakout. Every one of these bars touching the line. Alrighty, what the heck? What else can we do? How about a 60-minute bar? A lot of people trade 60-minute bars. Let's see what they would see. And this is what they would see. Okay, this is this day. It's again the 15th. So it just, let me, just so it's clear here for everybody. I think you can see the dates on the bottom now. Hopefully you can. And what's the market do? Really not a whole heck of a lot. It's just, again, we come up here and all these bars touch it. There's no clear breakout to the top or the bottom or reversal or, resistance becomes support or anything. Now, here is the very important point. The thing that makes resistance or support work is basically a self-fulfilling prophecy of the masses of the market. Remember, all these markets, I don't care if you're trading stocks, forex, futures, commodities, or options, they move based on auction theory, which is how much do people want something, what's the supply, the demand, for whatever reason. Could be logical reasons, could be based on fundamental analysis, could be on news, could be on rumor, gossip, it could be emotional. So for whatever reason, prices move up on demand, move down on a imbalance of supply and demand. So what's happening here? Well, we've got people all over the world trading different time frames of the same market and seeing different things. They're seeing that line differently than when we traded it on a 5-minute chart. So that means, again, we've got to have a lot of people come in buying, a lot of people come in selling at certain levels in order for them to work in the sense of work. I don't even like using that term, but in order for the market to go down off of them or to go up when you come into support. And when you've got people trading all different time frames, these support resistance levels look different to people on different time frames. And therefore, you're not going to get that mass psychology all coming in where you have drawn your level, or I have drawn my level on our time interval. And so that means you have fewer people to fulfill that self-fulfilling prophecy of what they see on the charts. And that's one of the reasons why these levels are not maybe as significant as you thought they were, or why maybe when you go up to resistance and it does come down, like it did on the 5-minute chart, it goes right back up again. Because there's a small percentage of market participants watching that 5-minute chart. And different people will see different things depending on the time interval they're trading. Thus, you need to have, as I talked about in the last video, not just support resistance. Yes, we do use that, but that's only 1/5, 20% of what you need to trade. Again, trend number 1, momentum number 2, cycles number 3. Number 4, we use support resistance, so it comes in at level 4. Support resistance, the 4th thing we look at. And then number 5, the fractal energy. The other energies, by the way, when I talk of energies of money flow, I'm talking about basically just supply demand. The energy of the movement of the market based on bids and asks and buys and sells. That's the energy of the money flow. And so you got to put it all together. Now, one of the things I mentioned too is timing. You can't just look at support resistance. You can't just look at price levels. You have to have a cycle indicator to time your entries. And very few people do that. Look, there's 2 dimensions on a chart. Right? We got this little 2-dimensional object we lovingly call a chart. Down here, what do we got? We got time. Over here, we've got price. Lots of people trade price action, and that's good, that you should, and that's where your support resistance levels come in. But so many people ignore the element of time. Well, that's half of the information on your 2-dimensional object we call a chart. You cannot ignore it. You will then have a worse than 50-50 win-loss ratio. So I'm going to share with you my timing indicator. Just feel free to go over to indicatorwebinar.com. I'll give you an hour there. It's recorded, by the way, so you can view it anytime you want. I'll show you the indicator that I use. You've already got it on your chart. You just need to modify it, and I will show you how to trade it, give you a full tutorial.